Is this a buying opportunity for Crowdstrike? Unfortunately, for investors, the stock is down roughly 44% year to date. Wasn't this supposed to be a stock that can handle numerous macroeconomic environments? Well, let's take a closer look in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
First, let us understand Crowdstrike. The company's most recent 10Q report describes itself as a global cybersecurity leader that provides cloud-delivered protection in various ways via software-as-a-service subscription-based model. The mission statement is simple: they stop breaches. They do this with their own Crowdstrike Falcon platform, which has various cyber solutions from endpoint security, cloud security, identity protection, and more. Crowdstrike believes the icing on the cake for its technology is that it is powered by cloud scale AI, allowing the platform to continuously learn and improve its threat detection. As a customer, you can build a plan that works for you. One customer might only need 4 modules while others might need more. Now let's jump into financials. But first, if you are enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe. You see my link at fool.com/Jose. Finally, if you want to learn about the semiconductor market, make sure to check out the #1 semiconductor podcast on the world. The channel is posted above or should be on the pinned description. Weekly episodes with the host describing the overall news that are happening in the semiconductor space. If we take a closer look, trailing 12 months revenue continues to grow, but what's more exciting is the cash flow from operations is roughly $830 million in trailing 12 months, and free cash flow is approximately $600 million. It is very rare to see a growth company with such high cash flow margins. What is more impressive is even if you deduct the $470 million from stock-based compensation, both free cash flow and cash flow from operations remain positive. Taking a closer look at its balance sheet, Crowdstrike has roughly $2.5 billion in quick cash and short-term investments and $740 million in long-term debt, mainly from senior notes due in 2029. So financially, this is not a company I would worry about. Later in the episode, we will discuss some of the risk. Now let's take a closer look at the company's recent corporate overview presentation from November 2022, which shares excellent insight. The presentation has over 47 pages, but I'll showcase only a few. First is the impressive growth in customers. In Q3 of fiscal year of 2023, Crowdstrike has over 21,000 customers, up 44% year over year. With the growth of customers, we also see strong momentum in annual recurring revenue and net new ARR. More important than getting new customers is keeping them and increasing their spending. Net retention has been over 120% for numerous years, and the number of customers using 5 or more modules have grown to over 60%. Another critical point is the improvements in its operating margins over the years, now 16%, whereas in fiscal year of 2020, it was still negative. The final chart is the overall growth in cash generation and how it has improved over the years. Now let's take a closer look at growth opportunities. First, this is an evolving, emerging market, so the total addressable market continues to grow. Crowdstrike is also entering new solutions via acquisitions or organic development that has increased its total addressable market to $76 billion in 2023 and expects to have a compounded annual growth rate of 13% till 2025, reaching over $98 billion. The other is government adoption of cybersecurity. We are seeing this all over the world. A perfect example is how Singapore wants all critical infrastructure to be ready for cyber threats. Currently, Crowdstrike has impressive solutions based on customer feedback and has won numerous awards. The final growth opportunity is the market share growth. On December 8th, Crowdstrike was at a Barclays Global Technology, Media, and Telecommunication Conference, and CEO George Kurtz mentioned that in modern endpoint market share, Crowdstrike is the #1 leader with only 12.7% of the market. So just in market share, there is plenty of room to grow. Now let's jump onto the risk. As we saw earlier, I do not believe there is much financial risk at the moment. Obviously, that can change over time. A risk, even with the current drop in stock price, is Crowdstrike's valuation. The current forward price to sales ratio is 11.5, and some investors might be pushed off by that. But remember, this is a company with strong revenue growth and cash generation with low debt. The other risks are the competitive nature and innovation risk. Crowdstrike needs to both combat big players like Microsoft and also continue to develop new solutions. A final risk is the current macroeconomic environment, which has created short-term headwinds where Crowdstrike is seeing its customers slowing down the rate of adoption. Where previously a company might get 7 modules is now getting 4 modules in one quarter and pitching the other 3 for the next quarter. I do believe this is more of short-term pain at the moment. I believe Crowdstrike is definitely valued as a growth stock for the right reasons. And for a growth stock, if it continues to win, the returns to investors have the probability of being amazing, but also comes the risk of failure. What are your thoughts on Crowdstrike? Let me know on the comments below.